Hello traders, it is August 30th, 40 minutes before oil news. In this video I would like to show you that Fibonacci is the only natural predictive tool in the market. Hourly chart is your key day trading charts for entries on 1 minute and higher. On August 10 we had incredibly bullish news on oil, but oil was at reversal zone. And this reversal zone on day trading chart reminded you, when the reversal zone is present, it doesn't matter how bullish the news is. Expect reversal 85+% of the time. This was incredibly bullish news on oil here. This was Fibonacci resistance, the end of the minor trend that oil was not able to break through. Oil collapsed again. Reminding you, you can never ever trade on the news alone. But if you know where Fibonacci levels are, you would never enter into. Next, oil retraced back up to reversal zone, identified weak in advance, and collapsed again. Another bullish news on oil. Why in the world is oil struggling? No surprise. Fibonacci resistance present. More of the bullish news. Houston flood, oil production cuts. Look at that announcement. Oil collapsed 200 points again. And that's what price does each and every time. If you understand where Fibonacci levels are, you understand and ahead of the game drastically more than if you trade on earnings, news or indicators, which are artificial delayed stuff. And if indicators and news worked, wouldn't everyone be Bill Gates? This is your day trading chart. This is the chart I will convert to 1 minute chart at the time of oil news release. And this is a chart I use when I work with hedge funds and institutions, as institutions and hedge funds holding positions long term. This is a chart that's been present in day trading room for years. This is where bullish rally started on oil at Fibonacci reversal zone, and this is where bullish rally had ended in crucial Fibonacci resistance, the end of the minor trend. Oil is heading lower. This is a key support. If you're holding position for weeks, months and years, you are using institutional weekly chart. If you are a day trader, you're using this chart, which we will dissect down to a minute chart before oil news release. A scroll on S&P continues. Remember that we discussed that 2448 on S&P will be a war zone. Levels identified weeks in advance in a play on S&P. Look at that. This was institutional support on that flawless Monday, August 21st. This morning we're so darn high, but as I warned you, this is support. You cannot short near. If you short into this support, your success rate less than 15%. We are extremely high. Crawl is on. No surprise. We are on the right side of the market. As I discussed Houston multiple times already on oil. So, in the course you learn that this is key Fibonacci target. This is when you move your stop outside of break-even and respect this level as your target. As every single knowledgeable Fibonacci trader knows, it doesn't matter what the earnings are. It doesn't matter what the oil production cuts are. The only thing that matters is Fibonacci. As tragedy in Houston with oil production cuts was such a bullish news, but oil collapsed because Fibonacci resistance was present. Oil did not skyrocket because of shortage of supply. Again. And that's what's happening on S&P each and every day, each and every moment. And that's what we will witness next on oil. As formula remains the same, what you will choose to trade, absolutely up to you. Price action, identical everywhere. Every single Fibonacci level in front of you is completely proprietary. Every single Fibonacci level you can install on any platform you will choose. On this Wednesday morning, crawl is on. Take a look. Fibonacci target is reached. How you placed your trade, how you executed your stop limit order will determine your success. As I continue warning you, we are extremely high. As I continue warning you, this morning, despite being in reversal zone, shorts are not an option. We're at key Fibonacci support. Clear on that? As knowledgeable Fibonacci trader knows, that was the only option we had this morning. Crawl remains to the upside, but buyers are tired so much. So if you understand the importance of this Fibonacci level, I would like to remind to you that exact same thing is happening as we speak across the board on gold. Look at that. This is your investment chart on gold. This is where sellers stepped in from multiple times in 2016, in 2017. You don't need to wait for weeks and months to witness the accuracy of the method. You're witnessing it daily, in front of you to the tick. Adjust your trail very carefully, and remember, every single student in the course trades different account size. Students in the course from beginner to hedge fund trader, trading account size from 5,000 to 7 and 8 figure accounts. Once you learn the method, you can identify what you want to trade. Is anyone surprised that price is struggling at 24.48? Should not be. In the course you learn, it's your key Fibonacci target. All you have to do is identify, are you a day trader? Are you an options trader? Are you a position trader? Choice is yours. And that's what we will see next on oil. And that's the reason I love oil during oil news event. Take a look on oil daily. This is a chart that's been present in the trading room since last year. This was oil in October, November, December. Multiple bullish news and oil collapsing. The biggest bullish news of the year was this April, as OPEC production cuts, incredibly bullish news announced. What did oil do? Collapsed exponentially until this Fibonacci support. What did you see on oil? What has happened in June? This decision point to respected. Do you remember where oil is now? On a 1 minute chart on S&P, at exact same Fibonacci target. Identical level. What is the difference? Instantly you're witnessing the accuracy of the method. You don't need to wait for days, weeks and months. Price action remains the same. The only difference, risk management and trader psychology. Clear on that? This is your key Fibonacci target. If you will ever choose to disrespect this level as your target, success is not possible. No matter if you're holding position for 5 minutes, 5 hours, 5 days or 5 years. Formula remains the same. The only difference is risk management and trader psychology. And that's what you will witness on oil next. How did I know that this would be key target? Because Fibonacci said so well before this target was reached. And that's what price does every time. And that's what Netflix had done well before phenomenal earnings were announced. Millions of subscribers did not mean a thing. Reversal zone is reached. But as long as Fibonacci support is respected, bullish rally will go on. Take a look on Netflix now. Does this look familiar? It's identical structure as your guiding light, S&P hourly. No surprise. Twins, identical charts. Never short into Fibonacci support. Problem remains. Buyers are weak. We are at reversal zone. But if you're respecting this as your target, profits off the table and stop outside of break-even. To the tick. Doesn't matter if you trade Netflix and if you're holding position for months. Doesn't matter if you trade 1 minute chart. The only thing you must remember is never ever ever place market order. Execution is at least 50% of your success. Never ever ever forget that. And that's what you will see next on oil. As very important institutional chart this morning at key Fibonacci support, where buyers stepped in from with vengeance in May, where buyers stepped in from with vengeance in July, and buyers may step in with vengeance next, at the time of oil news release. As Fibonacci levels identified since last year in a play this morning. And that's what I will do on oil day trading chart next. Take a look what students accomplished in the course. As you could see, Rod is trading 2 lots, Richard trading 1 lot. 2 lots on S&P on $1.100. 10 lots on S&P, $1.500. Lee's trading 5 lots. Do the math. As I warned you, every single student has different account size. Every single one of the students who is serious about trading becomes my best friend for life. Every single student has different financial circumstances. What you trade, what your account size is, up to you. You want to trade like Richard, like Rod, like Lee? All you have to do, play by the rules. All you have to do is identify what's appropriate for you, your account size, your personal circumstance. As S&P, the most popular day trading instrument in US, targets are reached. For knowledgeable trader, daily quota is over. Your daily schedule is done. You do not babysit the markets. You do not babysit the charts. You do not wait for hand holding. The worst idea ever. Hand holding in day trading is never a recipe for success. Anyone who survived in day trading for a couple of months would know that extremely well. And that's the reason students learning the course. Proprietary Fibonacci levels, proprietary Fibonacci rules. You will never find anywhere. So ladies and gentlemen, trading room had been open only 23 hours. Out of those 23 hours, market been dancing in correction for at least 10. Would you like to work 23 hours per month and trade like Richard, like Rod, like Lee? This was trade number 19. As you saw very clearly, every student trades different lot size. On this particular trade, your key Fibonacci target was reached. How you scale out from your position, which DP2 on this trade is a key target, absolutely up to you. Currently, your trade is placed in perfect place. Trade is still on if you're trading multiple lots. Look at that. Let's take a well-deserved break and let's come back, see what's happening with the price before oil news. My goodness, look at the importance of proper trail placement. Look where price is heading to next. Shock or not. Look what Tashi is posting to us as Tashi arrived later. Look at that. See on that? And that's what determines your results. As he played incredibly conservatively and he trades completely different lot size. How you place your trade, where you place your trade will determine your success. Clear on that? Price struggled at decision point 2 for a long time. Trail was placed in perfect place. Here we are at reversal zone. Anyone surprised? Should not be. Formula remains the same. Oil news in 10 minutes. Ladies and gentlemen, pay attention how much S&P 1-minute chart struggling at reversal zone. This is where an eligible trader adjusts the trail closer. Remember, this is reversal zone. Remember, each and every time formula remains the same. And that's what Fibonacci spelled out more than a week prior. This is Fibonacci support. Do not ever short into this level. If you ever do, your success rate less than 15%. Knowledgeable trader knows the danger of this area. Very crucial moment on S&P. So if you want to trade like Richard, like Rod, like Tashi, like Lee, all you have to do, play by the rules. All you have to do is remember, every single student in the course trades different instrument. Every single student in the course has different account size, has different circumstances. Course is ongoing. You can sign up at any moment. This week, key Fibonacci class may be on Thursday, not Friday. Because of long holiday weekend, I let students decide. In private mentoring, I have only 2 spots left, 3 days a week, booked until 2019. So kindly review the information on the website and most importantly, listen to the students who trade anything and everything, from S&P to stocks to options to Forex to ETFs. Students from beginner trader to hedge fund trader. If you can play by the rules, you can trade like all the students you saw share each and every day. Oil news at any moment. We are opening up during oil news at institutional support. Shorts into this level, worst idea ever. Next, you can see a bullish rally that will skyrocket. This is key support. Shorts, not an option. This is where buyers came from in April. This is where buyers came from in June, 4 or 5 days. This is where buyers came from in July, 2nd week, in July, 3rd week. This is where price is now. Shorts, not an option. Your bias firmly bullish if you are a day trader. Not just institutional support, but also day trading support. So let's go to oil news. Let's take a look what the news will be at any moment. Again, oil opening up at the time of the news at key Fibonacci support. Anything more negative than this number is bullish news. Anything more bullish than this number is bearish news. Oil news incredibly bullish. Take a look. Converting this chart to 1-minute chart. Is everybody clear how crucial this Fibonacci support is? Knowledgeable trader not touching oil the first 5 minutes after oil news release. What price will do next, because this correlates with key institutional support, is everything. Clear on that? As a day trader, you're trading with institutions. As a day trader, you never, ever, ever trade against institutions. Shorts into this level, not an option. Price can chop and dance non-stop. This is support. Shorts, not an option. And that's S&P, struggling at reversal zone, as expected. Identical formula. As on gold, as on oil, as on Netflix, as on Apple, as on Tesla, it's all the same. And that's what you're witnessing each and every day in the trading room. On oil, on S&P. What you trade, choice is yours. All you have to do, play by the rules. Like Richard, like Rod, like Tashi, like other students do. Choice is yours. What you will choose to trade. Shock or not, oil is skyrocketing. How did we know? Because as a day trader, when you're witnessing this day trading support is pleasant, as a day trader, you understand we're also at institutional support where oil, I've been sitting for the last 2 days, where oil bounced from multiple times. Level identified since 2016, traders. This is the moment you realize the sky's the limit if you play by the rules. Trading on the earnings, trading on indicators will never work. Trading on the rules always does. You will always be on the right side of the market if you play by the rules. Can you do that? That depends on you. Choice is yours. Is it possible that price respecting reversal zone this much? Look at that. This is not the place to buy. This is the reason I named this level reversal zone. Is everyone seeing that? So please pay attention how important the reversal zone is. To the tick, this level had been reached. And that remains the key. And that's the reason my students become my dearest friends for life. So, our number 24 trading room had been reached, reversal zone had been reached. Clear on that? Do you want to work 24 hours a month? Which out of those 24 hours, price had been incorrectly fluff 14, knowledgeable trader not in front of the screen? Your maximum work day, 2 hours per day, 4 days a week only. Imagine what's possible if you play by the rules. And that's what you learn in the course. So pretty please review all the information on the website and only then contact me with questions. But if you would like to join us, all you have to do is sign up on the website. Let's take a marvelous break. Well-deserved break.